We start today's market talk. When the tide eventually turns, the quality of the underlying business will determine which stocks survive and thrive, not just the market sentiment. And there is another one from Warren Buffett. It says, the casino now resides in many homes and daily tempts the occupants. When anything and everything you buy makes money, the constant skepticism that investors need disappears. It can lead to poor decision making where investors ignore the fundamentals and just move or chase on momentum. Take care to differentiate between speculative stocks and those with strong fundamentals, strong business models, and ability to generate value over time. Market outlook. All markets went up, emboldened by the liquidity to be unleashed by China, US, and other rate-cutting central banks. Chinese authorities took advantage of the leeway provided by the Fed rate cut to signal a policy turnaround of their own this week. So on Tuesday, PBOC reduced banks' reserve ratio, lowered repo and lending rates, and reduced mortgage rates and down payments. On Wednesday, China's State Council announced a 24-point plan to boost employment and social spending. And on Thursday, the Politburo pledged to stop fall in property prices, increase fiscal spending, support consumption and the private sector, which is most important. Government decided to support enterprises, small and medium-sized private companies, and support to capital markets. Reaction? Yuan strengthened, bond yields rose, Shanghai Composite Index was up 12.9%, basically due to a lot of short covering and short squeeze, and Hang Seng was up 13.1%. Cautious optimism echoed by the Indian IT service players is likely to linger in Q2, a seasonally strong quarter, although margin trajectory is likely to remain divergent. In this earnings season, listen for technology spending in BFSI when the IT management stock, revival of discretionary spending, etc. Accenture's guidance was conservative. They see generative AI as growth driver in FY25, along with digital transformation projects as the key drivers of earnings. Most IT stocks are presently expensive. Swiggy's listing, where it is seeking to raise 10,414 crore, is one of the most eagerly awaited IPOs of the year. It has lagged Zomato so far. It has narrowed the gap ahead of its IPO, but generally that always happens with companies coming up with IPOs. The gross order value in terms of food delivery, Swiggy's market share is now 43%, and it's a laggard in quick commerce. It should get a valuation of $10 to $13 billion. So we'll have to wait for the IPO and then how it lists. HDB Financial Services, a subsidiary of HDFC Bank, is likely to be listed soon. It has an AUM of 95,600 crores at end of June 24, growth of 30% year on year. Commercial vehicle construction equipment financing is 44% of the loans. Loan against property is 24% and business loans are 24%. It is going into consumer durable financing, global gold loans, digital product loans. Gross NPA is 1.9%, ROA is 3%, and ROE is 19.5% due to lower credit cost because of the brand of HDFC with it. It will probably come at valuation of Cholamandalam Investment and Finance. Hence, it will be also a big IPO. What it will impact is that once it lists at the expected 1 lakh crore plus valuation, HDFC Bank, some of the parts valuation is now close to 2100 plus. Indian steel producers are expected to face margin pressure in Q2 FY25 as reduced realizations continue to weigh on profitability. China's macros, which are deteriorating, is leading to oversupply, and rise in net imports from China has exerted pricing pressure on Indian metals When I say metals, it is both aluminum and steel. Their real estate month on month is minus 23%, and vehicle sales are down 5%, which are the two main buyers of the metals. Reduced domestic consumption is resulting in surplus, driving up exports. Indian steel prices saw a significant correction. NMDC announced a price cut for iron ore fines. So the positive part is that the input costs are going up, as also because of reduction in coking coal cost. Now, seeing the weekly data, Nifty was up 1.5% last week. Bank Nifty was flat. All the because of all the gains of the last week were taken out on Friday. Gold was up 1.24%. Silver 1.47%. Crude oil declined by around 4.5%. Natural gas was up 20% because of hurricanes in the US and also the incoming winter season, where demand is expected to be higher. Dollar declined, dollar index. USD INR was slightly better, stronger. So it gained to 83.82 now. 10-year bond yield uh, was flat. NSE market cap was up 1.32%. Market-wide position limits declined by around 11% because expiry-related positions were cut, and now fresh positions are been building. Dow Jones was up 0.59, Nasdaq 1.1, and S&P 0.62%. Now coming to US, indices been have been positive due to 50 basis point rate cut. Latest inflation data was also supportive, lifting expectations of additional rate cuts. US GDP has grown at 3%, and China-focused US companies outperformed after the stimulus in China. Hence, the narrative of soft landing is working perfectly, with strong economy and lower inflation leading to rate cuts. So the US bond yields are now in a downward trajectory after the upward trajectory is over, and have declined to around 3.75. Further fall will take place once the rate cut trajectory is clear. Dollar index is on again in a downward trajectory and is now in this zone of around 100. Once this breaks this, it will go down to 95 level. Brent crude is on a decline. Again, there is a declining trajectory. It is taking support at that uh, multi-year support now, which is at around $70. So this is that basic support where it generally tends to bounce, because beyond this, it becomes uneconomical for oil producers to manufacture crude. Gold is on an upper trajectory and now is heading to $2,700 to the ounce. Copper bounced after the China's stimulus and has straightaway come and filled the gap which had created between the 20 and 50 EMA. And now it may test that previous high it had made. So we'll have to watch out for this. Nasdaq is on an upward trajectory after the rate cuts and is now testing the upper range of this upward trending trend line. So once it breaks above that, it may go and test a new high. Dow Jones made a high. It is on a multiple year upward trajectory, and the trajectory has steepened recently after 22, after the rate cut issue became clear that there would be rate cuts. So it made a fresh all-time high. India VIX declined. It came below 12 on Friday. So that is positive for Indian markets because that should reduce the volatility. Nifty last week, I had discussed that there is possibility of a short squeeze taking indices higher, and on expiry, Nifty made a fresh all-time high. And also now at end of this month, the second quarter should end. So the mutual funds are likely to deploy additional cash to push the indices higher. But at these levels, it will take follow-up buying to keep the indices at higher levels. So we'll have to see what is the incremental buying now taking place. And if you would have noticed, every week, I keep asking everyone to keep faith in this trend and trade long. What we are seeing is the markets are continuously making new highs. So, 2 points to be remembered. First, look at dips and buy at lower levels, and hold your nerve. Don't panic on falls. Overbought status produces a pullback, but these are pullbacks and not reversals. So over last month, there is a marked underperformance of small cap stocks, which would have affected the portfolio. So that will also change once the earnings catch up, and we are getting into an earnings season. We have seen a 5,000 point high or higher levels from the June lows, which was around 21,200 now. So the trend is definitely higher, and let's see where the Nifty goes. So Indian government bond yields are generally at the same level. They came down, but they are generally at 6.75 level. So now they are waiting for further clarity from the RBI on the rates. Nifty 50 made a strong was strong, and consolidation though is expected now. Momentum is, if you see the size of the green candles, it is reducing, which shows that momentum is going down, or people are not that confident at high levels. But if you see the daily charts, it is trading above the 20 EMA. It traded higher on 4 days last week. Only fifth day, that is Friday, it was a small pullback took place. If you see the last two swing lows, one is at 24,800, the second one is 24,000. So that should be the supports for the traders to go long. Now coming to hourly chart. So if you see here, uh, the 50 EMA at 25,900 should provide a decent support in the short run. So one can easily, that should be a buying opportunity. Seeing the Fibonacci extension part, it can go to 26,600 levels from here. And the first line of support should be 26,100. That is a 20 EMA on the hourly chart. And the next 25,900 on the hourly charts. Nifty Bank, Friday's fall erased all the gains of the week. So we had a bearish candle on Friday. Weekly chart is an inverted hammer, which is bearish, but it is not change. There is a change in trend as such, or there is going to be a sell-off. We'll have to see if there is a follow-up buying or not. Now, coming to daily charts, if you see this candle, it took out all the gains of the last week. So we'll have to watch out for these levels. But till the time it is trading above 20 EMA, it is in a positive trajectory, and it is making constantly higher highs and higher lows. On hourly chart, it has broken through the 20 EMA. So if this 50 EMA takes support is there, then it can again try and go up to 55,245 or 50 levels. So that should be the first target in short term. Now if you see HDFC Bank, it tested the previous all-time high it had made at around 1800, reversed from there, and tested that 1750 level. So I think it should test this upper range of this gap or the 20 EMA at 1700 odd levels, and then try to again test if we can see if we can make a fresh high. So RSI, which had become slightly overbought, reversed. So watch out for this. Reliance bounced from the 20 EMA on the daily charts on Friday, and is now going to test this gap at 3,060-70 levels, which is there. So once it crosses this, then it can attempt to test its previous high. Now the stock which is showing momentum is in the metal sector is Hindalco. It has made a fresh high. It made a doji on Friday, but it was still with a gap, and it was a fresh high. So these are the stocks which are in momentum. RSI is also showing strength. Nifty Metal Index has bounced from the lower levels and is now testing its previous high. So it again similarly there was some profit booking at end of the week, but this is expected to do perform better. Midcap index was uh, was not having any positive momentum, but it still made a fresh high. It is again in an upward trajectory with higher momentum. So there's nothing is lost. So once the earnings are better, this will get revived. Similarly, with the small cap index, it has made two bearish candles over the last 2 weeks, but nothing much is lost till the time it is still above the 20 MA, and the trend is of higher highs and higher lows. So, though last week it made a higher low, higher high, and it made a higher high. So we'll have to watch out for this if there is an incremental buying. I'll cover three stocks today. First one is GMR Power and Urban Infra. It has a core thermal assets of 1650 megawatts, which are nearing optimal performance on coal tie-ups, PPAs to the tune of 90% capacity and improving debt metrics. Its 180 megawatt Bajoli Holi hydropower asset has largely stabilized. Its 7.5 million smart meter installation contract opens up a lucrative asset-light business opportunity with Bosch for vertical integration and unleashing its execution capabilities. Potential is for another 10.5 million meter order win through upcoming bid for 70 million, that is 7 crore meters in key states like Tamil Nadu. This is smart meters, Tamil Nadu, Madhya Pradesh, Kerala, etc. The management has a clear focus on deleveraging on the back of strong operating cash flow supported by conversion of FCCBs into equity. FCCB are foreign currency convertible bonds, which they are going to convert into equity so as to reduce their debt, but it will also lead to equity dilution and handover of Hyderabad Vijayawada Road project. They are going to sell it out so as to reduce their debt. So so they are very clear on reducing their debt as such. Now, seeing the structure of the company, this is the company. It has got four segments. GMR Energy, which has got these various operation projects, power, coal-based and gas-based projects, solar projects, hydro projects, and certain under development hydro projects like Upper Karnali project, which is there in uh, which they are doing with SJVN in Nepal. Then other energy assets like certain gas-based projects and wind projects, and under development the long HPP hydro project. Then highways, they have certain annuity project in Pochampally and Chennai ORR, and toll projects in Ambala, Chandigarh. Energy services is smart meter division. Then special investment region where they have this strategic land parcel for development. So this is the structure of the business. In terms of key assets, they have two coal-based power plants at 600 and 1050 megawatt capacity, which are now running fine and are now at peak capacity with PPS. Gas-based two projects they have, power plants, which are not running, inactive due to shortage of gas. So they are in discussion with the government's aim to explore potential solutions for resuming operations, etc. But these are not earning any revenues. Hydro project, they have 180 megawatt. This is in Himachal Pradesh on Ravi River. The project is enhancement to their renewable energy portfolio, and they have long-term PPAs for this. So that is a good project. And certain renewable energy project they are getting into. They have done a 26 megawatt solar capacity with two wind plants with combined capacity of 3.4 megawatt. So they are getting into this business. Total capacity they have is 3000 megawatt or 3 gigawatt, which is nothing much. You see, their revenues have come up to around 5,400 crores now, in likely to be in FY25, better than FY24, and they're going to be profitable. So the losses are getting rid because once the business performance has improved and the debt has reduced, they're going to do around 11 rupees EPS in FY25 and around 14 rupees in FY26 onwards. EBITDA margins have improved. ROE, ROC, etc. are now on an upward trajectory, will improve. Now, what they have done over a period of time, this GMR group, they have demerged their airport business, but they had a lot of debt. So now they are deleveraging through sale of non-core businesses, uh, through various things and conversion of FCCB into equity. Now they are doing fine in their thermal projects and now trying to reduce the debt with long-term PPAs and good cash flows. Similarly, with Kamalanga project, also thermal project, the Holi hydro project is also working fine. Their highway and road assets were not working out. Loss of revenue in Hyderabad Vijayawada project and traffic impacted on Ambala Chandigarh highway due to farmer agitation. So they are trying to settle their disputes with the various state governments on these projects so as to settle them. Smart meeting infrastructure, they have now got one contract and they are going to bid for more contracts subsequently. They are reducing their debt and the debt to equity ratio over the next few years will come down to 2.4. It was very high earlier. So they are going to constantly reduce their debt with better cash flows to around now 10,000 crore in FY25. In terms of valuation, if you see here, they are at much lower PE, but they are a smaller size also as compared to other power producers. And EV/EBITDA and PE wise, they are at lower levels. ROE is slightly better because they are now changing the business and reducing their debt. Seeing their chart, they have bounced from this 100 odd levels. Now they have reached 150 odd level after this kind of interest by the brokerages. But if you have to buy this, this has to be bought closer to 140. But there is not much of business performance or there is not much of revenue growth which is expected. This will only become more efficient because they are not doing much projects, bigger power projects, and smart meter projects are one big smart meter project makes a difference to earnings or EPS by around 4-5 rupees only. Next is I'm going to talk about the Genset manufacturers. The festive season from September 24 to mid-November 24 will keep Genset demand strong. Cummins India may gain market share in the current scenario with strong demand in the below 800 kVA and high horsepower segments. Continuity of healthy demand in second quarter FY25 even after price hikes. Because once the CPCB 4 Plus norm was introduced, the prices went up 20-30%. High horsepower demand is driven by fast-growing data center market. Higher pricing of CPCB4 genset is accepted by the market currently. In markets for above 250 kVA products, the preference is given to bigger players like Cummins and Coel, that is Kirloskar oil engines, which stand out in terms of better product quality, after-sale service, and resale value. So this quarter revenue growth is driven by price increase. Cummins was weak even in last quarter due to lower growth in exports. And export markets, we have observed, they are growing selectively. Below 250 kVA is dominated by small players and above 250 kVA preference is for Cummins and Kirloskar. Now seeing the earnings of Cummins, their income from operations are likely to improve around 15-20% over the next 3 years. Margins are also going to be 20% plus range. And profit after tax will go up around 20% every year from here, CAGR. Now they will going to do a EPS of around 89 rupees in FY26. Keeping that in mind, they can be easily given a PE of around 40. So they are fully priced right now. ROE, ROC are improved. Now they're in 30%, so they are becoming more efficient. They would be constant performance over the next few years. So you will not see a big spike as such, but they will not be negative. This thing, their asset turnover, working capital, etc. management is good, and leverage ratios are also good. So nothing wrong with that. Kirloskar oil engines, they are improving their revenue by around, again, same 18-20%. Margins are improving now. And PAT is likely to go up with a CAGR of around 30% now over the next 3 years. EPS is going to be around 46 rupees in FY26, with ROE, ROC now improving to 20% range, and ROIC is also becoming better. Asset turnover is good, so that means they are becoming more efficient. Now, seeing their chart, Cummins, after last quarter, had come down, tested the 100 EMA, and now it is stuck in this 3700, 3800 range. So every dip closer to the 100 EMA should be a buying opportunity for a long term. Kirloskar oil, same thing. It takes support at this 1100 or 1080 odd levels. Twice it has taken support and then rose. It is now testing the 100 EMA. So any dip closer to this 1100, 1080 levels is a good buying opportunity for long term. The last stock today is Zen Technology. The strength of this stock is its R&D strength, and they are now focusing more on exports. It specializes in land-based military training simulators, driving simulators, live range equipment, and anti-drone systems. Company recently raised 1,000 crore and plans to make 2 acquisitions, each value at 150 to 200 crore, focusing on simulation and electronic warfare. Its current order book stands at 1,200 crore, up 113%. Robust order inflow is likely to continue, led by focus on indigenization and portfolio of intellectual property developed products. Anti-drone systems account for 44% of its current order book. High margin training simulators contribute the rest. Export account for 20% of the total revenue in FY24, which the management aims to increase to 30 to 35% by FY27 and surpass domestic revenue by FY28. So it is not dependent only on domestic orders. It has quickly developed advanced anti-drone solutions incorporating both hard kill and soft kill capabilities. In partnership with its subsidiary AI Turing Technologies, the company introduced 4 new products: Hawkeye, Barbaric, Prahasta, and Sthir Stup 640 for diverse defense needs. Now, Hawkeye is an anti-drone system. Barbaric is lightest remote-controlled weapon station globally. Prahasta makes real-time 3D terrain maps important for mission planning and navigation. And Sthir Stup, stabilized site, is for armored vehicles, ICVs, and naval crafts. Company has more than 150 patents and delivered 1,000 training systems worldwide with 80% success rate in securing orders. Its business model centers on developing indigenously designed equipment with IP ownership and making product cost effective versus imports. Its revenue surged by 100% year on year in FY24, while EBITDA and PAT surged by 149% and 159% year on year. Looking ahead, company aims to double revenue in FY25 from FY24. Now, seeing this, they have basically 5 segments: anti-drone systems, combat training center, live ranges, live simulation, and virtual simulation. So all of these are in demand and have decent margins. Their revenues are going to be doubling to around 900 crores in FY25 from FY24, and EPS is also going up. The EBITDA margins are stable now in higher 30s or 40 range, and PAT margins are also going up. ROE is also improving. So FY26, it is expected to do around 44.5, and again the revenues are going to go up by 450 crores. So it's a decent earning trajectory is there. The stock had gone up to around 2000 odd levels, then is corrected, taken support at 50 EMA. So any dip to 50 EMA is a buying opportunity for long term. I have finished. We will take questions now.